Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for October 3rd, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 361. My name is David Kosmeter. I'm the creator of Timing Research, and you should be seeing my screen right now. Today I've arranged for Anka Metcalf, Sonny Harris to join us, Anka Metcalf and Sonny Harris to join us as today's guests, and the option professor is back as moderator. So I'm going to go ahead and turn it over to him.
Okay, thanks everybody for being here. We've got quite a market to open the week with, and the month actually, and the quarter. So it's a triple witching opening here, and a lot of activity on the opening, both up and down a little bit. So we've got two great guests, and they're going to share their ideas on not only what's happening now, but what they see happening coming up. And before we get started, let's introduce the speakers. Anka Metcalf, give us a little background on yourself, Anka, for those who haven't met you yet, and also what's going on at your company.
All right, so hi everyone and welcome. My name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com, and I run a trading company that is specialized in educating individuals how to day trade, swing trade, actively invest into the stock market and into the futures market as well. I specialize in day trading only in the first 2 hours in the morning, and that is in the New York trading session, specifically from 9 a.m. Into about 11 to 11:30 a.m. Eastern. I've been doing this for a very long time. In fact, I've been a professional independent trader for more than 20 years. I also come with an investment background, 10 plus years prior to becoming a professional independent trader. I'm also the designer of an institutional proprietary trading system. And the reason why I'm the designer is because I cannot take credit for technical analysis, but I have added my tweaks to it. The system that I'm trading is based on price support resistance, but I'm trading based on confluence areas, correlations. So I'm looking at much more than price support resistance. In fact, I'm looking at 8 layers of price support resistance. I've also developed, and these are proprietary for Trade Out Loud. You're not going to find them anywhere on the internet. Specific trigger times for the New York trading session. In fact, for the whole duration of the trading session, starting as soon as 9:32 a.m. and also with specific price zones. There are 4 specific price zones where algos like to leg in and like to scale out of trades, and we actually take note of those. Chart synchronicity and divergency is very important because that defines what we're going to be day trading, but it's also a great idea to look, if you're swing trading or investing, to look for relative strength or relative weakness in relation to what the market is doing. And I like to specialize on high velocity moves. I have, like I said, a very strict set of trading rules and a scoring system that enables myself and my traders to identify trades with these and kind of like be very picky on any trading session. But because we're picky, we like to specialize. So because we're picky, most of our trades, in fact, 80% or more of our trades are running in our way. We have transparent track record on our website. If you guys want to take a look at, you can run into our services tab, and you can actually, click on the drop down menu where you're going to find the trading room and the swing trading services, where if you scroll to the very, very bottom of the page, you're going to see our transparent track record. We have a track record since 2010 for swing trades and investing positions. And we also have track record since 2017 into our portfolio. And that is since 2000, like I said, since 2017, since we created the trading room. All right.
Okay. And we got a nice bump today by buying into that opening and catching a nice little pop. So, sometimes you can do, like you say, just in the beginning of the day, there's plenty of activity to make enough money for the whole day.
Oh, absolutely. Absolutely.
Enjoy the rest. Enjoy the rest of your day and not.
Yeah, exactly. So today we got about 85 points to 90 points pop into, actually more, about 100 plus point pop into the Dow. So that did it for me. Done.
Yeah, I got you. Okay. And Sonny Harris is with us, of course. And Sonny's been around for a long time, and she's very sharp on the mathematics of the market, and she has her own Sunny bands, which are very interesting, which we'll get to as well. So, Sunny, a little background on yourself, and then what's going on at Money Mentor.
Well, I'm a mathematician, trader, and programmer. I've been a professional trader for 41 years. I'm also a mentor, tutor, and consultant. I do one-on-one coaching and easy language custom programming. I'm the author of 6 best-selling books, and I'm almost done with my 7th. I give a free Sunday night newsletter called Sunny Side of the Street. I do a free live trading room on Tuesday mornings. I've given free forums on technical analysis and system trading in easy language, and I have a free podcast. And I love to teach people how to trade. And you can reach me at moneymentor.com.
Sounds great. Okay, we're going to start out with the question of the week, as we always do, which is the market on the S&P opened up at around 3610 today. And we'd like to know your probability and your direction between now and Friday, where we have the jobs report. So let's start out with Anka and give us a little idea of where we're going this week, Anka, and what's your confidence level?
All right. So I don't have a really high confidence level, and that is because the market has been fairly sideways last week and this week. Just going to give you a probability of, let's say 65% it's going to go to the upside. Okay.
And Sunny, what's your call?
I think we're going down a little further. We are below the 20% retracement level on the Dow. And I think they're going to test that as far down as they can to see where they can find a bottom.
And you have your Sunny bands up there? You want to give us a little tip on?
Of course I do. I always have Sunny bands up.
Don't leave home without it. The American Express card and Sunny bands.
You want to see I go.
We got your portrait. We got your portrait up there, but we were looking for the Sunny bands, and
you should be able to share
now. How about now?
It's loading. Okay,
there we go. Yeah. Okay. All right, so that's bottom of the barrel Carol down there. What are we talking about? It's got a red bar. Now it's got a blue bar. So
and that's a Sunny bands buy signal right there.
That's what I was going to say. So we got Anka saying it's going to go up 65%, and we got Sunny Band saying it might go up. So
and Sunny Band says it'll go up, and the DMA histogram echoes that. So that's a buy signal right there.
Yeah.
And
can we put on SPX, rather than the Dow, since most people are trading SPX?
Are they?
Well, I don't think they're trading the Dow. I looked at the volume. Looked a little light. It looked a little light on the Dow index compared to the SPX.
SPX doesn't come up.
Or SPY. Let's go SPY. SPY would be the stock symbol for that. SPY.
If I can type this morning.
Yeah.
It would.
Bam, bam, bam. There you go. There you go.
Okay. And see how we are below that yellow dot right there?
Yeah.
That's why I think it's going to go down. Even though Sunny Band says it's a buy, I think it's going to go up to the midline if it does go up. Otherwise, it's down. Yeah.
Because like I say, some of the moving averages I work with, if it can get above or stay above these 36.15 and 36.59 areas, does suggest 37.50 could be in the cards even further. I got a question for both of you. Anka, I'm going to start out with you with this question. We have had the VIX jump up towards 35 or so 1, 2, 3 times earlier this year. One was in January, February, one was in April, May, the other one was in June. And each time it was followed by a very significant rally of 4,200 to 4,600, 3,800 to 4,200. And then the last one was the biggest one, 3,600 to 4,350. So obviously we got the same movie going on right now. We hit around 35 on the VIX, and we're obviously in that 3,600 area. What do you feel we're going to see coming out of this VIX 35? Are we going to see a repeat where we get a 400 to 600 point move on the S&P up to maybe 4,000 on the S&P, or what do you think?
All right, so I'm a little bit concerned because we have just ended a quarter, on Friday and third quarter. And usually we should have been seeing a little bit of window dressing, but the reality is that none of the stocks promoted any kind of buying pressure, except, you know, some of the healthcare stocks like Eli Lilly and some of them within that category. So I think that this time around, we only had like a massive selling going on, and this is how they designed to, you know, kind of like dress up their portfolios, because we saw just a bunch of selling and not a lot of buying. I mentioned in the trade room quite a few times last week that this is very unusual. I'm not really sure, but I think I've seen it once in my 20+ year trading, where we didn't really have, and I think that was in 2008. And as we were going towards the last quarter of 2008, and following that, I said that if we're going to hop into the next year, and correlating now with the new quarter, we may see a little bit of buying activity. So it's really funny that, you know, the buying just came today. A little bit into the market. We don't know yet if this is a relief rally. Everybody's very hesitant onto the last quarter and Q3 earnings and the reports that are going to come out. There's a lot of indecision and, you know, recession, which is looming. Everybody's talking about it because the numbers are pointing into that direction. Everybody's saying that stocks are not really going to deliver on their estimates into this quarter. So it's going to be very hard to be very bullish going into the fourth quarter.
Right.
Typically, what I'm seeing in the VIX, because, you know, your question was specific on the VIX, I think that if we start breaking $36 to $37 in the VIX, this is going to be a line in the sand that the market is going to start imploding, and then we will see some kind of move down. We definitely have not reached a bottom. I remember when Kramer just like a month ago, he was saying that we have reached a bottom into the market for the year, and June is the bottom of the year. Where I didn't really see as a technical trader, I didn't really see a bottom per se, because you need to see some kind of capitulation. And until you see that, high volume, bigger price action, a lot of drama, we haven't seen that. So when I'm looking at the VIX, I'm looking at a possibility of over $36 to $37, constant basing around that number. And if we have that, then if we're going to get more pressure into the VIX, then the VIX can explode back into the $40. $40 and higher is going to be pretty much going to set the stage for another massive dump, the kind of dump that we had in 2020 when the pandemic hit, and, you know, when we had that big move to the downside. That is when we've hit the VIX $80. But that was, and since then we have been basing within $40 as a top. So $40 is the line in the sand, and the bottom into the $14. So it was like back and forth, definitely a lot of range. So we haven't seen that propelling price action into the VIX that would say, hey, the market is going to start dumping, or the market is, you know, the market is going to start, you know, moving higher just because the VIX. This is just a shallow pullback that we're having right now in the VIX, and I'm watching the VIX on a day-by-day level. In fact, the VIX are setting up for an uptrend onto the daily. You know, Jim, that I'm watching the 10 exponential moving average, and I like to have the power trend, the ultra bull trend on the daily chart based on that 10 EMA. That gives me a little bit of guidance. So where the algos may be wanting to leg in. But so far, I'm seeing that they're holding the $30. $30 has been throughout last week and this week, the line in the sand. It's also some kind of minor support right there. So I'm not going to be ultra bullish. That's why, you know, my confidence level is towards 65 that we're going to move higher. It all depends, and it all writes out how these funds, and if the funds are really ready to leg into some trades. Some of that they have actually sold into the third quarter. Like I was saying last week was definitely into the end of the day. On Friday, we saw a big move down. So there was a lot of liquidation, and that was organized liquidation because we saw constant volume coming into the market. And as far as the SPX goes, the SPX, I think that it's pretty much going to go in segments. Right now, we pulled back. We have a minor support level. In fact, we have just tapped into the September 2020 pivot high. So that means that as long as we're going to gravitate into this area, which represents the 3580, which we had the low on Friday around that area, and we're getting a little bit of pop. So that is a confluence level. We have a rising 50 SMA on the monthly chart. We have tapped into the 200 SMA on the weekly chart. So as a technical trader, we're, what I'm looking for is today, if the price action is going to start taking the Friday high out, which is 36.71, I think that the market may be ready for a little bit of squeeze into 3,700. Yeah. And if the line of the sand is between 3,700 and 3,740, if we start breaking above these levels, and especially the 37, I would go as early as 3,730. So if we break that, we may have a relief rally into the 3,800. But let's not forget that that 3,730 represents a big line in the sand, because if the price is not going to be able to push through it, that area may be a rejection point. And that is actually the July 14th low that we had in the SPX. And that is a line in the sand.
Yeah. That 3,800 area could be interesting. Yeah.
Anka, do you want to show your chart? So
sure.
Yeah.
You should be able to do that now.
Okay. Just give me a sec. I think I have it. All right. I think you guys can see my chart right now. Okay. Yeah. So I'm showing the SPX right here. And I also have, like, I can't live without these. These are the fib retracements. Yeah. This is from the pandemic low, and this is from the high from January 3rd of this year. Yeah. And we came back into this minor support zone. So we had a little bit of a hiccup here in September where we had the shallow pullback. And then this represents right now, this resistance will represent right now minor support for ongoing price action, which I think is much more stronger than a major support, because it's a level that has been visited and revisited right now, revisited. We also have the ascending 50 SMA right here. I love the fact that we're bouncing off of the 200 SMA textbook here. So yes, right, a really good reaction. And of course, I've mentioned the 3580 area as being support, and kind of like, looking at this level right here. So we're just tackling this prior low from June. This is the June low that Kramer was talking about as being the lowest point. He may be right. I mean, the fact that we came in just a little bit, this is still support level. So it may still very well be, but I'm not seeing any kind of capitulation into it. For example, when I look at the SPICE, I want to see some market participation into it. I want to see some really big volume coming in, like institutional power. I'm not seeing it. And by the way, I always look at, things that are correlated with the market. We had Rosh Hashanah, and everybody saying sell a Rosh Hashanah, buy a Yom Kippur. I think the volume is going to stay low. We have Yom Kippur that is going to be celebrated on October 5th, I believe. It's on Wednesday.
It's so October 4th, but it begins at sundown, I guess, on October 4th. Yeah.
Yes, and everybody's, nobody's working. We know that New York hedge funds, a lot of firms, they're closed this week until, I believe it's until Wednesday or Thursday. Some of them already took the whole entire week off because of the holiday, and they will be back at work next week. So I'm expecting very low volume. I wouldn't trust the moves into this market. That's why I'm having, I'm taking trading on a day-by-day basis of what's happening. But definitely we should see some more activity going into the market following Yom Kippur, and definitely following going into next week when we're getting closer and closer to earnings season.
Yeah. You got positioning, and you've got very oversold versus the moving averages. So you got the reversion to the mean, and you got the VIX coming off 35. So that is there's three good reasons why you could get a little bit of a pop. Plus, you say the selling might have abated because these guys are on vacation. Exactly. So the setup for a rebound rally is certainly not off the table. But one guy over at Morgan Stanley was saying that the money supply is contracting to a point where historically there's been a shall we say, an accident. And and liquidity is terrible in these markets now, as you can tell by the swings that go up and down. So are you looking at the M2 money supply, because it has supposedly has contracted into a danger zone? A danger zone meaning in the past, when the money supply is contracted to this zone, there's been shall we say, a financial event.
Well, yeah,
you know, when you lose liquidity, as you saw in England last week, when you lose liquidity, that's when the events happen.
Exactly. But like I said, you know, the market is easily can be easily moved when volume is low. That is when volatility can increase. So we're gonna have to pay very close attention. I also wanted to highlight the fact that we had a little bit of larger volume on Friday, but really nothing that significant of a sign of capitulation on the weekly chart, for example. So it was fairly, you know, it was a little bit you know, kind of pronounced, but I would say like it's totally it's totally the bottom.
I think you made a very good point, Anka, in that number of 35 on the VIX. I think people who are holding positions, you know, of any size, if that were to break and we take out the 35.80 and this money supply M2 being in that danger zone, that could be the trifecta where you could get that, you know, that big drop you're talking that is potentially still on the table. Because again, you break the new lows under 35.80, you get that VIX above 35, you look at your M2 money supply, which means liquidity in these markets stink. And then you got these earnings coming up on October 14th. They start talking about guidance that stinks. That's the trifecta that could maybe break this thing, you know, for that last shoe to drop, that people are wondering, you know, is the earnings shoe going to drop? Well, if it does, along with the VIX above 35 and along under 3,600 on the S&P, you could go into the vacuum a little bit, right?
I agree.
Yeah. So that's something to keep an eye on for people, you know, who are not just short-term day trading, but, you know, maybe have substantial exposure still out there. All right. Well, Sonny, going back over to you again. What are you seeing here as far as, you know, do you think what's the probability on your Sonny bands? Because your Sonny bands were showing that if we get above this area, 3,750, 3,900, very much in the cards.
You talking back to SPYs now?
Yes, go back to SPY. Go back to SPY here.
I can do that. I was looking at VIX along with you. Trying to see what Sonny Band said about the VIX. It looks to me like it's topping out.
Yeah, if it is topping out, then again, the fact that every other time this year we got a good 400-point rally on the S&P could still very much be in the cards. So that's why it's very important, I think, to watch the VIX.
And it could move right up to that midline, which is on the SPY at 381.06.
Yeah, 3,800 on the S&P. Yeah.
So that could easily happen.
Yeah. And then if it got an overshoot, because let's say, I mean, if you get the 10-year note trading under 350, and you got that dollar index underneath 109, you know, that could be two stimulative factors to get you up towards that 398 or 390 number, huh?
It sure could be.
Yeah.
I still think we've got further down to go, though. I mean, I'm combating my own indicators. That says long right there. It's clear as can be. And I think it'll go to the midline and then come on back down again.
Yeah. So your best case scenario for a pop is a moderate pop towards the 3,800, 3,750 on the S&P, and then go back in the soup.
That's what I'm thinking.
Yeah, that could very well be.
Yeah.
Well, let's turn over to Anka real quick and just have her run through some stocks that she's liking or not liking, or commodities she's liking or not liking, and get some flavor for what her research is showing. Anka, you want to go back up, and then Sonny, we're going to come back and you're going to show us a little bit about some of the the stocks and stuff that you're looking at in the index.
Sure.
Yeah.
All right.
Because I know you've
got
a few balls in the air normally, Anka.
All right. So I signaled silver last week. Silver futures is just massively rallying already. So that is like gone. This is kind of like after the fact. But this is something that we discussed in the trading room. It's actually SLV. So I'm just gonna look at SLV. So we have this monthly rotation is definitely much stronger than gold. Gold today already just trading above the 1,700 Let's put out GLD. These miners and gold and silver stocks are going to be on top watch. We have weekly rotations. We tapped into a support level on the 50 SMA. We're still very early on the month, but if we start trading above 162.25, we're going to start moving higher. We have a little bit of line in the sand here in GLD, and GLD doesn't have as much relative strength as silver has. So silver has been very robust. Silver has proved that it's holding between $18 and $20. Is it already trading at $20.50? I think that any pullback into the $20 may be a really good trade opportunity. Also, I was looking at platinum very strong as well. There was a really huge signal, huge buy signal as well, because it was in sync with silver. So platinum and silver. Copper is not as strong. I'm also looking at bonds. I have not been trading very actively bonds this year, and they have been all over the place. So I really wanted to stay away from them. I will watch this week to see if the bonds are going to start trading a little bit above this high right here. And if they do, then I think that may be a good opportunity, to start looking for a long. Not significant, but at least into the 130-120 area. And I think that may be like, kind of like a smaller type of swing. What I'm looking for is the ADBE, which has the potential for a short squeeze, especially on the daily. It has been pretty flat within last week, within these last couple of days, let's say a week or so. And I think it's really ready here on the weekly. If it trades over 288.90, it's going to start squeezing, and I have a target on it $300 and $325. I'm going to look for small trades, so I'm not going to go for really big targets, like take your money and run, grab your paycheck and run. Also, Micron, semiconductors, Micron AMD, let's keep it a watch on them, because they had a pretty nice tight inside price action last week. I think they're going to be ready to, they already have triggered, still sideways on the 1 hour chart, but still looking very robust for a little bit of a push, at least into 55, and then probably into the 60 area. Also, NVIDIA is on my watch. And by the way, I'm also on the investor side. And with the stock split and with the prices of NVIDIA, of Amazon, Google, Tesla, right, you name it, I think these are really good. So if you're just starting out your portfolio and say, hey, you know what, I want to be like a long-term investor, this is really a good opportunity to start. Like, again, you have to be, all you have to know is your risk tolerance and what your risk tolerance is. And once you find out that risk tolerance, you could just, just take very small positions into these stocks for long-term. I think these are really great. Can they drop some more? Obviously, we could see NVIDIA that the next level of support is probably around $50 to $70. But yeah, you can add some more. If you're on the investor side, I think that, this is a really good opportunity to start building up that portfolio. There's also a really great rotational pattern that may happen here into the 128.25. If we break above the last week's high, we have a pretty good chance, decent chance of getting back into the 140. Plenty of trading opportunities. Another stock is Netflix. Netflix also had a pretty robust, and now I'm going to show you another chart, not only Netflix, that are kind of like independent to what the market is doing right now. So you can see this really nice, gorgeous base that we have right here. A break above the range of into the 248 can start extending higher. Remember, we have this big drama here. Can start extending into the 300 and 325. And here is, again, pins. Take a look at this pattern. With the market selling last week, well, it didn't really do much. It kind of like had a nice inside bar formation. So I think that if it starts breaking $24 again, I'm in pins, and I have a pins position, although longer term, and I have a swing in pins as well. And I think that it's a pretty good opportunity to start going to $25 and $26. Like I said, what I'm going to be looking for is some really small trading opportunities here and there. Probably using half the size and double down on the stop would be a good idea. because it's gonna give you a little bit more flexibility, and you're not gonna get dinged out of trades as much. Amazon is also on high watch and high alert, because it is possibly trying to rotate here. I'm looking to see if it can digest the 117.25 just above this 10 EMA, and then we could see the price rising a little bit higher into this top right here from where we gapped up. So 120 is going to be 120 to 122 is going to be my targets for Amazon. Starbucks has been pretty robust as well. And notice that Starbucks last week ended up in a doji, so it didn't really slide with the market. I mean, it did, but it didn't really make, you know, that much of a drama down. It held actually the prior week with the drama down. I think that most of the stocks are into the kind of like into a waiting room right now, and you know, trying to see, okay, so is the market going to hold? Because there are a lot of investors that are sitting on the sidelines and they really want to jump into the market. Remember that the fourth quarter is the quarter that has lots of volume. People that have been sitting on the sidelines from the beginning of the year all the way into the fourth quarter, now they want some action. Plus, we're getting very close. Remember, we have that perspective in the market with big bonuses, right? So are they going to receive the big bonuses this year or not? Because the market has been underperforming, and we saw a lot of selling into Q3, which was kind of like evident that the funds are not doing so well. If you're looking at CNBC, like you're seeing like all those sad faces right now, and when they're showing portfolios, they're double digit down, and double digit down, not only the stocks, but their holdings, their clients' holdings, like 50% down, 87% down. So that's really not a great, you know.
Yeah. What about Nike, NKE? Because what I've noticed is the dollar index hit about 115. It's at about one level, a level, and we've seen Nike, Starbucks, and Apple, the multinationals, starting to get a bid right now.
Yes, exactly. So I think
that's
that
a dollar
Nike has
play,
a great Nike has a great opportunity for a short squeeze, and actually I have some alerts on it into the 80 just I have to check my alerts, but they're not showing right here, but I think they're into the $86.50 to $87, because if we break above it's only trading right now at 86, so I have that a little bit of higher into the 86.50. So if we break 86.50, if we break above it, I think we get a short squeeze and try to go into this gap fill, but this could also be a trap and can run a little bit higher, and then tomorrow we may have have a push down. What I do like is this big sign of kind of like capitulation here. So this is what we want to see. We want to see moderate volume and then a big spike to the upside. So everybody that wanted out, I think they got out here, and now it's time for a rebound. People that wanted to hold or want to like get into it, I think this is going to be the time to start getting in.
It seems like it's correlated to the dollar index peaking at 115. Now, I don't think it's a coincidence that Nike and Apple are getting reversals here because the dollar's backed off. There's a question here from one of the attendees for Anka that Anka, could you put up ES or NQ? Someone's trying to find out what your thoughts are on ES and NQ.
Oh, absolutely. All right. So here it is. Here's the chart of ES. We actually did a pre-market game plan this morning that you guys can find on YouTube. We were live this morning where we talk a little bit of macro of what we can expect from the market. So the M&A S&P is the same as SBUX. So we're getting the massive support level here into the 3550 area, 3600 as well, into your into possibly a rotation back to the upside. We had a nice, gorgeous reaction this morning off of the 200 simple moving average. And we had a really nice, robust, let me show you something that was really gorgeous right here. We had this rotation that happened in the overnight trading session with an inside bar. So this was the line in the sand. This 2615 to 2620 was the bullish sign for a little bit of a recovery as we were going into the New York trading session. We actually traded today the Dow but all the patterns were in sync. So I went with a little bit more relative strength because the Dow was moving much, much, much smoother, higher. So I just went with it. We had traders that took the mini S&P in the trading room as a day trade, and we had targets. One of the targets is 3693 that we were looking at for today into the 3700. Again, with the indices as well as the ETFs, just look on a day-by-day cases because things can change dramatically from a day-to-day. It's always a great idea either to be on the investor side right now because you're not going to get dinged out of trades, or on the day trading side. Day traders have made money in this market, where in the swing trades, there was a stall in the market because the market was, a lot of stop outs occurred. And again, if you're a swing trader, just remember to double the stop. Half the size and double the stop is always a great way to go in volatile markets, especially when we don't know if the bottom is in yet. But with the mini S&P, we can run into the 10 EMA 3,700 to 3,720 is going to be a decision point. Yeah. If this area is going to get rejected, remember, if we base bullishly, for example, on a smaller time frame, 15-minute charts, 30-minute charts, 1 hour, if we base into that top, into the 3,700 to 3,720 or around that area, then if we get a pop over 3,720, the price action is going to escape higher. It's probably going to go 100 points higher. But if not, that could be a rejection point and the price action can be sent back down. In my book, it's a 50-50 shot at that level into the 3,700 to 3,720. So there are 50% chances of continuation higher, 50% chances of taking it back to the downside. Very difficult area in where we're at right now in the market. And I'm not just saying that, it's like everybody's saying it. Because
there's a gap on the chart, Anka, between 3,700 and 3,725. So it might be fill the gap and then roll over.
Quite possible. It's quite possible.
Yeah.
It's quite possible. And all the indices are in sync. So regardless of whether you're looking at S&P or NASDAQ or you're looking at the Dow or Russell, they're all trading in sync.
Yeah, they really are.
But I do like the pullback into the 50%. We don't have any kind of definition or directional bias into the mini S&P on the monthly chart, but we do have some kind of a reaction into the 3,600 into the S&P. So if we keep on going and if we close strong today, like I said, and if we break above 3,700, we can run into the 3,800. So we have that nice, let's say, continuation to the upside.
Sure. Hey, Sonny, can you put your Sunny Bands up and maybe we can take a look at some of the markets and get an idea of what Sunny Bands is saying? Because, they all seem like they're trying to make a turn here, but let's see what they look like on Sunny Bands. That might give us more of an insight. You know what I mean?
Sounds good to me.
Yeah.
There's a daily chart.
Yeah. Okay, now we're going to start out with looking at the stock market, which we already hit pretty good. It seems pretty much in consensus that if it can get through this area, it might have a pop up to a little bit of a higher area. But let's take a look at some markets that really, might be making major turns if the dollar has peaked. And let's start looking at gold. Because I have some gold shares from last week and they're just flying.
Yeah, we've got 3 or 4 upward bars right in a row there. So, and it has pierced the midline of my dynamic moving average,
which comes in around 1693 or so. 1693. Where's the gold? The gold and the purple are kind of meeting there.
Yeah, but you can see down on the bottom on this ribbon that I've got of gold and purple. You can see right there that purple's on top, even though they're too close together to read on the dynamic moving average itself. Because who's on top shows me it's purple, but it's flat. The last 2 bars, it's flat. So that says to me that it could do one of 2 things. It could either go on up to the upper bands, the inner and the outer, or it could stall because that's flat and come right on back down.
Right.
So you have to be on your toes.
Yeah. In other words, keep things on a short. You'd keep things on a short leash.
Yeah, you have to watch price. So whatever price does, I follow suit. And again, I'm a short-term trader, so I'm not looking at daily charts, but that's where it is.
Yeah. And the silver?
SLV. See if I can type again this morning. And it's above, look at that. It's above the upper band, which says it's going to go on up. It's going to try for that 200. This
Yeah.
is a 200-day moving average on this.
So if too many people were short or out, and it's a fairly thin market probably, and there you go.
Yeah, and we've got low volume, and so we're going on up to this 200, which lies at about 20.27.
Yeah.
And then you can unload your silver, Jim.
Yeah. I mean, the silver stocks got one. AG is just really popped, and PAAS, Panama Silver, Pan American Silver. Those are two that are just on fire right now, which is
You
great.
want to look at them?
Yeah, well, yeah, AG and the other one's PAAS.
Same thing.
Yeah,
There's a nice gap above and
but
running right to that.
$6 to
upper band.
$8 is not a bad deal, you know.
Not bad at all.
And then PAAS, I think that one's flying pretty good.
There we go.
Yeah,
Same
40
story, not quite as strong.
No, but
It
certainly
has-
from the lows, it
touched-
popped up nice. Yeah, from the
It
lows,
did
it
pop
popped
up
up.
nice, but it's touched the upper inner band and
Yeah.
not yet the upper outer, which
Just
is at about
the spiking up gets you feeling like it might have just been a big short covering spike, and of course it could settle back down. But certainly from last week to this week, it's been a nice thing to been involved in.
Yeah.
Let's take a look at the crude oil, because you know, that seems to be getting above that 82, 83 number, which I thought was kind of important.
I predicted a couple of weeks ago on my sunny side of the street that we would get down below 80, and we're at 76.36 at the moment.
Yeah.
No, sorry. That's the bottom band. We're at
Yeah.
83.27. So we
Yeah.
popped back up. Gasoline last week in San Diego was $7.47 a gallon.
Wow.
So yeah.
Forget about that.
Pop-
And then
pop up.
these guys are talking about cutting production on Wednesday. So, you know,
Right.
Yeah.
A billion barrels or something like that.
So yeah, some of the oil shares like CVE seem to be getting some spike.
Yeah, a little bit, but again, we've got the
A lot of resistance right there.
Hold it down.
And what about MRO? That's another one that seems to be somewhat popular.
It hasn't followed through as much as the other two.
How about DVN, Devon? That's really the Cadillac in this area sometimes.
Same story. It's got a flat DMA and it hasn't made it up to it yet.
Yeah.
I think that's going to be the next high at 63.86.
Again, a lot of people are referring to this M2 money supply contracting. And again, when it contracts, it obviously reduces liquidity in the markets, and it also can be a little deflationary, obviously. And so that M2 money supply contracting into that zone could be the explanation why some of these things that we'd expect to be going a lot higher may not go as high. So we'll have to see if that does play in. But I thought that that was anecdotal evidence that was kind of important. And what about the US dollar? That would be I don't know what it is on your system.
DXY, I think. No.
UUP should work.
UUP.
That's the ETF for the, well, it's the dollar index.
Well,
There's a
the
dollar. There's a dollar index there. Yeah.
coming
So
down.
Yeah, the
Coming
upper
down.
band got hit there, and now it's
That
into.
turn red. That's a sunny band sell signal right there.
But it is into some support around the 111 with the gold and the purple, right?
Right there at the DMA. It's
Yeah.
111.24 is where.
That's what I
support
thought. If we broke 109, that could be more of a signal that the dollar might be rolling over a bit. And if not, you know, a little too early to get the party hats out.
Yeah, and if we go on down below the dynamic moving average, we're moving on down to 109.65 and then 108.38.
Well, let's look at two other factors in the stock market. One is obviously the tech sector, QQQ. On the growth to value ratio, we got a real sell signal on tech in August, and that was a real good sell signal. But right now, and back into value. And so what's the tech sector? Yeah, a little bit of a dead cat bounce, really.
Mm-hmm. Yeah, just a little bit of a bounce. It's not enough really to take the signal, although that's a sunny bands. Well, the red ones didn't close outside the sunny band, so it's not a buy signal yet.
Yeah,
It's
it
still
doesn't
selling.
it doesn't look like the highway. It looks like a lot of stop signs up ahead, right?
Yeah, and it gave a sell signal on what's this date? 8/17, right?
Yeah.
right there.
Yep.
So we've been short from that time all the way down to here and still holding short.
Now, what about IWM, which is your small caps, which people tell us sometimes is the first one to turn? Let's see what that looks like.
And it has given a buy signal.
Yeah. So you got a little bit of a buy on all the indexes. You got a little buy signal on the metals. You're getting a little bit of a turn here, but there's certainly some resistance up above, huh?
Yeah. And
Yeah.
see, there's less than 50, less than 21. There's also a less than 200 right here.
Yeah.
Tells me that the price is below all three of its moving averages, 21-day, 50-day, and 200.
Yeah.
So that's pretty bearish.
Yeah. And then, of course, Friday, you got a jobs report. If that thing comes out strong and shows that wages are going nuts still, I mean, I don't think that can help the situation for what people are looking for.
Right. And I think that's what's going to happen.
Yeah. Any other markets that you're kind of looking at, any particular stocks or?
Well, my favorite. Let's look at it. It's Tesla.
Oh, yeah.
Yeah. So the rest of the market's taking a bounce. Tesla is not today.
Yeah, they missed on their deliveries, I guess. So people are
by
concerned
not
about
much.
that. Yeah, no, but that's what they're concerned about.
I know, but the deliveries was set too high. They were some large percentage above their last quarter and above price last year, deliveries last year.
I tell you, there's one shocking thing that I heard today on Bloomberg, and that was that there are 10 times the amount of electric filling stations in Manhattan, in New York City, than there are gas stations. So I thought
Wow.
that was a pretty amazing stat, which means it seems like New York City seems like it's definitely getting ready for the electric situation.
Well, and Biden just put in a new something to 10 million or 10 billion or something dollars to put into electric stations.
Yeah.
Across, including small towns.
Yeah. What would like a NIO look like on the charts?
Yeah. Well, they last I read last night about them, they're delivering more and more cars into the US.
Mm-hmm.
But this does not reflect it, does it? It's still going down.
Yeah. Like I say, that M2 money supply contracting into that danger zone, that could be an explanation for a lot of things that people are confused about.
It could be.
Because when you reduce liquidity in markets, it's hard for them to go up.
Mm-hmm. Who's going to be spending money on it?
Yeah. And then some guy was also saying no matter what happens, there is a earnings recession ahead. And if that obviously hasn't been priced into the market, so the tighter money supply and an earnings recession dead ahead, that could be two very difficult hurdles to get above.
Yeah, and that's the kind of thing why I'm thinking it's going to go on down.
And Anka made a good point about that 35 VIX. I mean, right now the standard tape for the whole year is when the VIX got into the 30s and you were way down on the S&P, you buy the heck out of the S&P and you get a nice 400-point run. That's been the music for the whole year. If that music changes to where we don't get a big rally on S&P and we blow out 35 on the VIX, then that could be a real, shall we say, game changer as far as what's been going on throughout the year. Because again, it has been a heck of a good trade to get long stocks when the VIX was coming off the 35 number all year long. So if that changes, that could be something. But, that seasonality going into the end of the year is always very sexy to people, for looking for that rally. You know what I mean?
Yeah. Oh, yeah.
So
that's a Santa Claus rally, right?
Yeah. I mean, that's what they always say. It's all according to where it's going to come from. Yeah,
well,
a lot of room between now and Thanksgiving and Santa Claus. So,
and really, we really don't know if they're gonna be having those big fat bonuses like they had last year and in the prior years. So,
what would that do to affect stock prices, whether these guys get a bonus or not?
Well, I think that, they're reinvesting their bonuses, and a lot of people are reinvesting their bonuses. But if the economy is not doing that great, not only funds, but, individuals, I mean, I would think that they may not be, if they see the market so decline, they may have the intention on sitting on their cash and not putting it into the market.
Yeah, like I say, the three things that could get people really going on this thing into the end of the year would be a break in that 10-year note down towards 350 or less, a break in that dollar index down to 105, and a jobs report that says people are actually losing jobs. If you got that trifecta, you know, you could get a rally that would, as they call them, face ripper rally. There's no doubt about it. But of course, those are three come line bets. You know what I mean?
Mm-hmm.
In other words, those are three things that have to all go your way to get that. So that's that could be a big ask at this point. So, well, as we get towards the top of the hour, I think it'd be good if you guys can just again review what you do for people, so when they call you up, they know have an expectation of what they could receive. So, Anka, could you give a little bit about, you know, how you're going to help people try to work with these markets?
Of course. I think it's a great position. Sunny Harris already said it earlier. You know, she's on the day trading side, and I think that we're a little bit more privileged into this type of market, because you've seen how treacherous the market has been. It has, you know, it has been quite difficult for swings. It has been quite difficult even for investors, especially investors that dove into the market last year, because right now they go like, oh my gosh, you know, I just invested and I'm down. But again, your time horizon is totally different. You should not be looking at your account. If you have money set into that account for 10 years from now, then you shouldn't be looking, because the overall market, you know, tends to oscillate, and ultimately it will end up, you know, higher. It's just a matter of time. But I think it's so great that, you know, we're day traders, and Sunny, you can, you know, probably you can attest to this, you know, because we don't really have to fight, you know, the big issues like how is the S&P going to end into the end of the week? Like, I don't even know what's going to happen tomorrow. Right. And nobody knows what's going to happen tomorrow. We can, because every single time when we had a rally, then the next day we saw the price back down, and you know, the low was not able to sustain. But anyways, I focus more on day trading, and we do have two services. We have a futures day trading room where we trade every single day. The performance is on our page website. If you log into tradeoutloud.com and go, if you go to, I can just share the screen so I could show you guys, because I think we still have a little bit of time here. I don't know if I can. Okay, screen share.
Yeah, that's why I want to give you some time to show the people, you know.
Okay.
leave a little less, leave a little less to the imagination and a little bit more clarity, you know.
Exactly. Exactly. So here it is. This is our website. If you go to the futures trading room, I'm just going to hop in here just very quickly. If you scroll to the very down side, you can see that at the very bottom of the page, we have the futures trading performance. And this is the performance that, you know, basically this is from 2017, 2018, 19, 20, 21. And if I scroll fairly quickly, you could see that. And basically we haven't had a down year, not even a year. We haven't had a down month in all these years. And for those of you that for people that have been in the trading room, it has been a blessing. So anyways, these are today, this is updated at the end of the month. So we posted the results. The results are per contract. So if individuals are following, this is just a guidance. It's just per contract. It's not through position sizing. I do use position sizing, and in fact, I don't know. Yeah, we don't have time right now because I actually started to track my, and, you know, because a lot of people say, hey, I want to see what your account is like, you know, not an Excel sheet. So I have been doing exactly that. So I'm taking snapshots every single day of my account, and the performance is going to be totally different next year. It's going to be transferred from my brokerage account exactly into a software that tracks and measures everything else. We also have a swing trading service. This is the stock swing trader. And also, if you go to the very bottom, you're going to see that we have the swing trading performance here, and the swing trading performance is from 2012. We do have it, but it's snapshots from 2010 and 2011. This is where we had it tracked differently with the third with a third company that was tracking it and was doing the audit for us. So we lost some of that Excel sheet, but it's still on paper. It's still a snapshot there. So we have the results 2022. You guys can see, you get to scroll through it, and these are all the trades, the good, the bad, and the ugly. In fact, you could see here we have, you know, a lot of trades that some of the trades are long-term. So this is what you can expect. We also will be hosting a special webinar tomorrow about position sizing, and because position sizing is what's going to make or break you as a trader. So yeah, this is pretty much it in a nutshell, what we do at Trade Out Loud.
Okay, sounds great, and everybody should check it out, and they can get all the details from you. Sonny, go over a little bit about at Money Mentor, exactly how people are going to be helped by calling you up or contacting you.
Well, there's a couple of things that they can do. One is I do offer mentoring, consulting and mentoring at a reasonable price, considering I've been trading for 41 years and am a programmer. I also have a free Sunday night newsletter called Sunny Side of the Street, and a free live trading room on Tuesday mornings. You can join that. I have given several free forums. You can download those just by becoming a free member. And I have a free podcast. We just interviewed on Saturday, we just interviewed Linda Bradford Rasky. So that's a lot of fun. Okay. And then I have indicators. Of course, you want to buy Sunny Bands. Yeah.
And of course, you'll explain how that works and do more of a tutorial on basically how you can use it.
Absolutely. But we do free one-on-one tutorials. So just give me a call. My number's at the top of my website.
Okay. All right, guys. And thanks for being here today. I think we covered an awful lot. I think it's going to be very exciting here. Obviously, we're going to get to that 37.25, 37.50 area on this jump. And we'll be happy to see. And of course, Sonny and Anka will be able to tell you in their rooms there exactly what's going on. As far as Option Professor is concerned, if you go to optionprofessor.com and put your email in, we have a couple of PDF reports we can give you and a one-on-one education session on how to use the options, as well as what our market views are on all these different things as well. So that's optionprofessor.com. Thanks a lot, you guys, for being here. Again, exciting time of the year, and I'm going to throw it back to David.
All right, thanks. Yeah, a ton of good info today. So just a quick reminder, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Or you can also just go to TimingResearch.com, and you should see on the screen right now the Timing Research website. So this will become the archive for today as soon as I can get everything processed and posted there. And so I just want to thank my guests again for today: Anka Metcalf of TradeOutLoud.com, Sonny Harris of MoneyMentor.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Absolutely. Thank you, David.
Thank you, David.
Anka.
Thank you. Hey, Sonny, it was nice to see you again.
It's great
hey, Jim.
to see you again. Thank you so much.